I think generally speaking, we are in a later cycle environment here. We have a Fed that's very much in play. And in that environment, you ultimately get into a slowing economy situation. So when we say offense and defense, we still want to own some of the sectors that have traditionally been the growth sectors. So what comes to mind is technology in particular, but also some of the energy that's now sold off a little bit. We think the supply-demand fundamentals are pretty strong there still. But on the other side of that barbell, the defense side of it, is staples and healthcare. So we think in a slowing economy, potentially, people will still buy their staples. They will still need their healthcare. These are sectors that can do quite well, even in that environment.
People are not going to stop buying paper towels, right? They're going
toothpaste,
to. Toothpaste, toilet paper. These are essential. John, how does that sound to you?
Yes, I agree with the fundamentals that Mona described, and I really believe investors should focus on now some of the seasonal tailwinds. We hit a low last week, and then we had 3 back-to-back days of 1%. Historically, forward 12-month returns after hitting a 5-month low and then having 3 consecutive days, similar to what we experienced in October 11 and February of 16. Trailing forward 12-month returns are in excess of 10%. So that, in addition to the strong fundamentals, we see solid seasonal tailwinds behind this.
When I hear things like that, John, when I hear those kinds of historical patterns, I begin to sort of go, is that an accident or is there a reason for that? I mean, it could just be, it just happened that way.
Right. When it happens 18 times since 1950, the 18 midterm years, it's something I think we should pay attention to, because if you look at history, more often than not, as you spoke to from the previous guests in the earlier segment, the president typically loses what? The sitting president loses 28 seats on average. And to prime the pump, if you will, for the next presidential election, you typically see investors discounting a combination, whether it's a Keynesian approach, demand-driven policies, or supply-side-driven policies. But either way, the fourth quarter of the midterm year and then the first half of the next calendar year tends to be the 3 strongest quarters in the 16-quarter presidential cycle as investors discount that future growth.
That seems to tell me, at least, that you want to buy the whole market, the S&P 500. And Mona, when you're talking about the barbell approach, buying offense and defense, that sounds to me like you're just buying a basket that reflects the entire market. Does it matter who wins the election in terms of having one end of the barbell outperform the other end of the barbell?
Generally speaking, a Republican sweep, which is not a high probability scenario, is a pro-growth scenario. We may get issues like tax reform back on the table. We may get an infrastructure bill potentially, but we also might get more pro-growth deregulation. So in that scenario, we want to perhaps focus more on the growth side of the barbell. In this scenario, or the most likely scenario, which is the gridlock, which we have discussed, where really a lot of the economic agenda is already in place, tax reform, deregulation, and some of the trade policies, we want to continue focusing on the other parts of the economy as well, a Fed in play, rising rates, and that's where the offense and defense comes into play.